I'm Tom Kennishenko, and I've been actively investing in crypto since 2012. I've done 2 investment vehicles in the crypto space. I recognize some of you from those. And today I'm here to speak about a new one that we're doing called Protos. And Protos is one of the first tokenized hedge funds. So it's a hedge fund, but the way that you buy a stake in our fund is by purchasing a Protos token. That gives you a stake in the fund, but it also gives you a completely tradable cryptographic token. Before I describe too much about what Protos is and sort of our strategy and how everything works, I want to just get everybody really clear on the changes that we're seeing in the market in 2017. So 2010 to 2016, very few tokens. All of us had months to review white papers. That was luxurious. And the best strategy was to buy Bitcoin and hold it and not sell when the entire world told you it was a scam. In sort of mid-2016, we saw a very significant shift happen. And we saw an explosion, obviously, in the number of tokens, which you could invest in. But we also saw an explosion in public interest and willingness to purchase these tokens. In 2017, that creates a few realities for us as investors. And there's still many, many ways to do very well in this market. I mean, holding beta positions is one simple way to do that. But there's a few interesting changes that we have to deal with as investors. One is that if you're buying a token on ICO day, you're buying probably quite an expensive token. And it's just like when you're buying a stock on IPO day, most of the value has already accrued to the founders and the early investors. There is a lot of tokens, as we just saw some statistics on. So you do need to spend a ton of time reviewing white papers, which often are quite highly technical, meeting with teams, and to do that as an individual investor is becoming quite challenging. If you expect to make money trading, which we've done a lot of over the years, we've noticed, and I know a lot of others have, that it's become very serious, and there's teams of PhDs sitting around becoming more and more aggressive with trading. The funds, obviously, there's going to be anybody's guess. I mean, maybe 100 investment funds by the end of this year, maybe 50. So our traditional funds, and I'm pretty familiar with these challenges, having done 2, are those the answer to some of these challenges? And I think there's some realities with those that make them not quite the entire solution. So funds are often requiring a minimum. Often you have to be an accredited investor to invest. The investment in, for example, hedge funds is often illiquid, so you're trapped in a position in a market that's moving extremely quickly. And I mean, 2012 is not a long time. There's been people in this room that have been in crypto much longer than I have, but there aren't that many people with deep crypto investing experience. And for example, meeting with teams to interview them to understand their technical proficiency within crypto, or to understand complex crypto economics is actually a pretty serious challenge. For example, the largest hedge fund in the space is being run by a 27-year-old computer scientist in Silicon Valley. So we have designed Protos specifically to solve each one of these problems, and we've worked on it for quite a long time, about 12 months. You buy a Protos token. So the Protos token gives you a position in our hedge fund. 100% of the money invested goes into the fund. The team doesn't retain any tokens. And you also now have a tradable hedge fund token, which trades openly on the market, so you could buy and sell the same day. There's no minimum investment, and it is fully liquid. To design a hedge fund that could succeed in crypto is a bit of a unique thing, and the team we've put together has a balance of skills that we think make us equipped to participate in this space effectively. And so we've been investing collectively in crypto for about 13 years. We have worked on a number of different startup companies, 3 technology startups and 1 fund. And we've had some successful exits, including an IPO on the NASDAQ. And we have managed investors' money. So we've managed or traded over $3 billion worth of other people's money. Myself, I've basically just been a tech founder for about a decade. Crypto investing started to become quite active around 2012, 2013. And my role here is to find very good teams at a very early stage and help them work on their projects, their crypto economics, and help them execute successful ICOs, and then create successful protocols. Matthew Shaw is a career investment banker who co-founded and exited one of the first emerging market investment banks, which actually has quite a few parallels to crypto. if some of you are familiar with that space. And Matthew traded large amounts of money at several banks, including UBS. Philip Kaleroff is a machine learning PhD. He and I actually did a tech startup in Silicon Valley a few years ago together. And Philip is focused on data and trading within our fund and focused on some of our algorithmic strategies that I'll talk about in a second. Mark Vanderchies is a founder and a special advisor, and Mark has been a VC in crypto for forever. He also founded Tudo, which is the YouTube of China, and IPO'd that. So we've some great advisors supporting the fund. We've gone for as premium of a structure, as professional of a structure as we possibly could. Obviously, there's some legal concerns about tokens these days. Too many advisors to list on a slide. Lawyers are here in New York, Skadden, and they did the first fund token, so the BCAP token, if you guys remember that. And the Argonne Group is advising us on our structure and our ICO, and they also did the first fund token, which was BCAP, and Civic more recently, which you guys are probably familiar with. So in terms of fund advice, we've created a list of advisors who can help us preserve money, first of all, keep it secure, and also just pursue a very professional fund strategy. So one example is Jules Green. He was a co-founder of Ashmore Group, which has about 50 billion under management. And we've also built some ties into the crypto world over the years, and we're really focused on people who actually know how to build new protocols. So an example is Joshua. He familiar with Blackcoin? It's the first proof of stake, first real implementation of proof of stake that code is now being used in over 4,000 projects on GitHub. So quickly on our strategy, what are we doing as a hedge fund? You're buying a token, you're participating in our fund, what are we doing? Our strategy is based on our beliefs about what is happening in the market now and what we expect to be happening in the future, which we've heard a bit about. So 2017 is the year of too many tokens, and to keep up as an investor, you would have to be some sort of wizard. And people are now specializing in different verticals, just like what happened in venture capital. We believe that 2018 is going to be the year of data and better trading and security infrastructure. So we trade right now a book of about 40 tokens, and in order to do that, we've had to build pretty intense security infrastructure. How do you take multiple tokens on and off the internet rapidly in a safe environment and pay low fees when you're transacting them? So in 2018, we think the first real data sets will come online, and security and trading infrastructure will also be significantly more robust. I know a number of you are probably working on projects related to both of those. We are helping to incubate a bunch of early stage data projects, so Enigma being one, Walter being another. Walter, for example, is building a distributed Bloomberg to create some of the first data sets for this market. Once we have data, and we can look at the stock market, the equities market, for an example of what happens when you have really robust data, you can begin to use the powerful software and algorithms and tools that are available to start to trade. And about 60% of equities are now traded by an algorithm. The other interesting trend we think is going to be applied from the equities world that will be applied to the crypto world is the idea of multi-manager platforms. So when you have, for example, a large data set, you can build an interface into that data, and individual traders from all over the world can trade that data, and funds can be allocated to their strategies when they're working. So you can go from being able to hire a team of 10 PhDs to having 100,000 PhDs trading your fund. So our strategy aligns with those trends. In 2017, we will be, and we're actively doing this now, but we'll be investing heavily into the core assets in the market, the established protocols that are in the market and are proven. So Bitcoin, Litecoin, Ethereum, etc. This is just an example of some of them. We do rebalance and trade those and do some things like market making. But again, security is a very serious concern, and we want to be pretty careful with how we're trading and when we're rebalancing those assets. And we're also investing in early stage projects. So seeking to invest in projects, for example, Walter at like a $2 million valuation, and likely seeking an ICO valuation in a few months of about $100 million. Just a quick mention of security. Obviously, I think we all are well aware that security is a serious issue, but we're trying to form relationships with the best people in the world around security, Zappo being an example of where we're storing our Bitcoin. 2018, when data sets are available, and right now there are not many, we'll begin to allocate more of our money to our data strategies and really focus on building out trading strategies that rely on reliable data sets and data streams. In 2019, we would like to launch the first multi-manager platform in the space. Maybe somebody else will do that in the meantime. But a multi-manager platform really does rely on robust data. So once we have data, we can build an interface into that data, and we can begin to algorithmically allocate funds to traders on our platform. Why that matters to holders of the Protos token is that we believe 2017 and 2018, those data-driven strategies and allowing others to trade our fund will allow us to grow that fund very rapidly. So 50, 100, 200 funds by the end of the year, we're not sure. What is different about a tokenized fund, and what's specifically different about Protos? So as I mentioned, it's a token. So you buy Protos token, it gives you a stake in the hedge fund, but it also gives you this tradable digital asset. I think investing in crypto is a weird mix of skills. You have to be able to meet with a team and interview them for technical proficiency, to understand what they're saying about the architecture of their project and their token economics. You have to understand the legal implications of the construction of their token and where they're selling it. And you also have to be able to secure large amounts of money and manage it very professionally and create security infrastructure and in a year or so to begin to trade. So we've combined people who have all of those skill sets. And I guess the last thing is that we're just, as a fund, we're really focused on staying ahead of the trends, specifically the two major trends that we see being applied to the crypto market that we've seen in the equities markets: data, algorithms, and machine learning, and then multi-manager. So we are completing the Protos crowd sale in just a few short months. Pre-sales begin in September, and then the actual public ICO is in October. You can check us out online. We are just starting to put some information up. Today is actually the day that all of this information goes live, so you guys will be probably the first people to check it out. But thanks a lot, and I'll talk to you all today.
Quick question, anyone? Oh, there we go, we've got one.
Perhaps I didn't hear, but you said you took no fees on the funds you were given. And what's your business model? How precisely you get paid?
So we take no tokens. So normally in an ICO, a team would get an allocation of tokens. In this case, 100% of the funds, of the money that purchases tokens goes into the hedge fund. And then the hedge fund has a management fee and a success fee. So a fee for managing the money and just paying for operations and security, and a fee if we make, when we make returns.
In and out. Money in and out. So can I cash anytime?
Yeah, I can't speak to the mechanics just yet until our OM is in the public domain. But when the fund makes returns, token holders do receive, do get those returns back. And the exact mechanics of that will be described in the offering memorandum.
Cool.